Hello my fellow freedom builders and welcome back to the channel. Today we are not going to talk about one specific stock, but we are going to talk about a problem that is all over the world right now and is spreading like a wildfire. We're going to talk about zombies. And now I know you think you know what zombies are because you have seen Day of the Walking Dead or what all these zombie movies are, but no, we are talking about companies, zombie companies. And you might know the whole concept of zombies from the movie, where it is a person that actually should have been dead but somehow is still alive due to some sort of virus, something that has been put into them from the outside, and all of a sudden they come to life, and we don't really know how long they're going to be quote unquote alive, but they are there. And they are walking around, they are damaging other living humans, and they are damaging the environment. And that is actually quite a good metaphor for what the zombie companies are. So what we're going to look at today is what they are, and if it is something we should really invest in, because there might be some chances here of making money, but it is also a risky game. So let's have a look at it. First of all, the zombie companies are companies with high debt, and they can only just service their debt, meaning they can only just pay the interest. Some of them can't even pay the interest, but many of the zombie companies can pay the interest but cannot pay the debt off. They depend on low interest rates, of course, because they have a lot of debt. Many of them rely on bailouts, and here we can think of the banks under the financial crisis. We can look at the airlines right now. We can have a look at the oil industry and so on. There are many examples of entire sectors that are asking for bailouts now that we have a crisis. They cannot reduce the principal of the debt, and too many of them undermine the economic recovery. Now, the last part I'll get back to later in the video, but let's just have a look at how the books in a zombie company could actually look like. And we have an example here. We have a financial statement for XYZ company from 12, 13 and 14 here. The years don't really matter, but what we can see is they have some sort of revenue, probably in the millions here. So they have a revenue of around $80 million. Let's say it is dollars here. There are some cost of goods sold, the COGS here. Gross profit is around $60 million. Then we have a lot of expenses. They are quite fixed as well. And we are ending up with earnings before interest and taxes. That's the EBIT at around $2 million. However, there are some interests here. And as you can see, the interests are actually higher than the EBIT, meaning that the earnings before taxes are negative, so they can just barely pay the interest rates or the interest payments, and there is absolutely no cash flow left to pay down the principal. They cannot do any research and development. They cannot buy new material. They cannot do anything. They simply they are there, but they are not really making any money. And of course, if we ask ourselves, why is a company there? Of course, it's there to produce some goods or some services, but basically, at least if some people have invested money and time into them, we must assume that the goal is to make money. And seeing at a financial statement, looking at this here, we can see that it's not really fulfilling what it is meant to do here, because it is not making money. It is just existing, and probably, maybe it should have been dead. Let's have a talk about that later. First of all, let's see why these companies are on the rise, because they are. First of all, we can see that the total debt to GDP, this is the overall, this is not just corporate debt, that is quite high, and we can see that in times where the interest rate, that is the blue-orange line here, in times where that is going up, there is a tendency of the total debt to GDP to be fairly neutral here, going sideways. But with a dropping interest rates, we can see that the overall debt is skyrocketing. And of course it is, because we're not as much looking at the total debt as we are looking at how much should we pay You know that if you're going to buy a house and you have $1 million for it, maybe just $100,000, but you need $1 million to buy the house. But all of a sudden the interest rate is cut in half, and you can see, wow, now I can borrow twice as much money and still pay the same every month. So that is also what we see in the overall economy, that when the interest rate drops, we can see that the debt is going up. Right now, when we are looking at zombie companies, meaning companies that can just barely pay the interest rates but cannot pay back the debt and cannot develop the entire business here, we can see that the percentage of US zombie companies is skyrocketing. And maybe you're thinking, yeah, well, that is because of the virus and all sorts of stuff. People want to borrow more money, and that is just for a shorter time frame here. But no, this has been going up. And as the interest rate has been plummeting, then these percentages of US zombie companies are really going up. But a problem here is, first of all, that they depend on low interest rates, meaning that we have almost a fifth of the US companies right now that if the interest rates were all of a sudden to jump 1 or 2 percentage points upwards, then they would simply cease to exist because they would be out of business. We can also see here that the business borrowing has soared in the US. And of course here in 2020 it has gone absolutely parabolic, but we can see that since the financial crisis here, and this is as a percentage of the GDP, we can see that we are at an extremely high level. Even back in 2000, where we had a lot of zombie companies, you should think, because that the entire internet bubble, even then, when we're looking at the numbers, there were actually not that many, because it was actually only one sector. It was just the tech, the internet, but pretty much all of the other companies, they were able to pay off the debt, and we had not gone into this low interest frenzy yet. That really came around here just before the financial crisis actually, and especially also after, where the interest rates plummeted and the percentage of US zombie companies has gone absolutely crazy in numbers. Now, if we try and find a definition here, because I'm looking at this CFI Corporate Finance Institute here, and I'll link to that below. You can see I have the numbers here. They're talking a bit about the origin of the term zombie companies, and it was actually used first in the late 80s about some zombie banks in the United States, where they were bailed out by the government, and there was an economist saying that it was kind of like the zombies from the movies. They were not actually supposed to be alive, but they were kind of too big to fail, so the government bailed them out, and they were just not really making money, but they were there, and they maybe shouldn't have been. But then in the 90s, we saw the same term used in Japan, where a lot of companies were supported and subsidized by the Japanese government. And what we can see followed that was what Japan and the rest of the world called a lost decade, or actually more like 2 lost decades, where this supporting the companies actually damaged the entire economy. And I'll get back to that just in a second. We should say that of course that sometimes it is good to have a zombie, because there are something called the zombie startups, and nobody expects that a company just starting up should produce billions and billions in profits from day one. So there's no problem in a company borrowing money. I'm a big fan of that, and that can really juice up the growth in the economy. But if we have companies that start up and maybe they have some sort of plan to start making money, but when we saw back in 2000, we saw that many of them actually didn't really have a plan. They hoped that someday there would be some sort of takeover and they could be a part of a larger tech startup. But actually many of the companies were having a huge burn rate, and every time a new investor came in, they were just burning millions and millions of dollars each and every month. What we have seen now here in 2020 and also 2019 is that a lot of companies in that could be the hydrogen sector, that could be the EV sector, they are hoping for some huge expansion of the market so they can start making money, but actually many of them are not really there yet and have not really any plan as to how to get there. But the zombie startups, the company running with a loss for maybe 1 or 2 or 4 years, that's not really the problem. The problem is with the larger companies running as zombies, because one of the reasons, the effect the zombies can have on the economy is that a company, of course, should do some research and development. They should make new patented products. They should really be creative and grow their company. But a zombie company, they have some talent mass in the company, but they are not making any money, so they cannot do any research and development. They cannot really grow. They cannot do any fantastic thing for the overall economy of the country they're located in. So they are just there. They are occupying space. And they are taking resources away from companies that are actually good. Let me give you an example. And I know some of you will hate that I have just picked this example, but I just stumbled upon the Uber. You know, the kind of cab company that where you have the Uber app and you can call this private cab driver. And here in Denmark, it has been forbidden because it is in competition with the government-controlled taxi legislations, but many countries still have the Uber. And when we are looking at Uber, we can see that their revenue, the revenue is growing. That's kind of nice. But when we see the operating profits, they're running with a big loss, net profit loss, earnings per share normalized, that is pretty stable and horrible here. When we're looking at the operating margins in percentage, they're running with a 50% negative operating margin here. We can see that their free cash flow is negative and actually growing larger in the negative direction. And when we're looking at the interest coverage, we can see that they cannot even pay the interest on the short-term debt. But still, they have been in business for quite a while now, and they are planning to keep there, and the investors of course hope that at some point Uber will be so large and have so many advantages that they can start making money. But the problem is that in this process, when we're talking about how a zombie company can actually damage the overall economy and damage the healthy companies, then we can see that a lot of other cab companies, a lot of other taxi drivers, the revenue from these companies are being stolen over to Uber, that are actually running with a loss and will keep running with a loss at least a lot of years yet, if in my predictions here. So we have some good, decent companies that have built themselves up and are running with a profit on the capital they have invested in it. But now they are running with a loss because we have some sort of zombie company that is stealing away because they are competing, they're getting investors in, but they are not really building a profit. So that is the danger with the zombie companies. And I know some of you might say that, yes, but Uber has revolutionized. They have come up with the Uber app, and a lot of the cab companies have taken over the ideas here. And yes, they have. I think Uber have done some good things on the technological side of this sector. The problem is that if they don't come up with the profit pretty soon, at some point the investors will start saying, is it really such a good company? And let's say Uber went down. I'm not sure they will, but let's just say they went down. Then in the time span, 10 or 15 years they have been running with a loss. They have in this time span hurt a lot of profitable company. And you might say, yeah, well, in 5 years we're looking back and you're saying you were completely wrong about Uber. And yes, I might have been. But that was just to give you an example. It could be any company. Let's say a Shell oil company right now that is heavily subsidized by the government, for instance, in the United States. These companies need something like $50 per barrel in oil prices just to be able to pay off their interest on their debt. But right now, the oil price is way below that, so they are depending on outside investors, on funds, on banks, and at some point, if the oil price will keep at this level, this entire sector will need a huge bailout from the state. And in this time period, they have been able to produce oil and to destroy other oil producing companies' profits simply by producing or losing money in the process of producing oil. So as you can see, we have in this big zombie sector here, and that it is many sectors, but in this area of the zombie companies, we can see a lot of damage being done to the overall economy because they are being kept alive on an artificial basis, and in the process they are running around. If you imagine the zombies in the movies, they're running around and killing other people simply because they have been keeping artificially alive. So a big problem here is that this number of zombie companies are growing, because having some sort of percentage of zombie companies is not necessarily bad, because it keeps people in work, and these people are paying taxes and so on, so it can keep some sort of wheels turning in the economy. But what we see right now with the explosion in the number of companies, and not really any, it's not like this curve is tipping off here, no, it's just keep going straight up. So that this will be above 20% pretty much in 2021, and maybe we'll reach 25 or 30 or who knows, 50% in 10 years from now, if the governments all over the world, they just keep printing money and bailing out companies, so that all of a sudden we have 50% of the United States companies, of the European companies, living on subsidies from the government, just printing more and more money and risking going into some sort of crazy inflationary environment. So when you hear the term zombie companies, you should be aware of this. Now, on the shorter time frame, it is actually possible to earn some money in having these in having investments in these companies, because it is possible to run with the crowd. And I just picked Nikola here because, in my opinion, Nikola is such a quote-unquote good example of a zombie company, because they have not even created a revenue yet. Oh yes, they sold some solar panels to the CEO at the point, Trevor Milton, but and then they have some plans, but it is quite doubtful if they will ever start earning some money, and if they will be taking over by GM or I don't know who. But let's not have that discussion today. I'll just give you a quick example that even though Nikola is, or it is actually one of the worst cases of zombie companies, because they're not even making a revenue, they're just living on investors' money and then selling out some of their own shares and hoping to get some other investors in. But what we can see is that it is actually possible to make money on these, but you should do it out of a technical analysis perspective. And here we have the daily chart, but of course you can do it on, as I have mentioned many times, on a 4-hour time frame, where you can actually look at some sort of moving average and saying, yes, as long as it is above this moving average, I stay in, but when it breaks down, I get out, because it might be something with the Emperor's New Clothes where he's actually walking around naked and there's not really any possibilities of this company making money. You can see that lately it has actually been going a bit up, but now it is dropping down again, and it has not really given us any buy signal. Another company that we can look at here, and that is one of the really crazy examples here, is Hertz. As you know, the car rental company, and they have been a terrible business for years, and the stock price has gone down, but of course still people have been buying into it. But then they went bankrupt, and of course you could say that would bring the stock price down to close to zero. But then people started to run towards this bankrupt company because at this point, and this was only May, June, there was a clear tendency in the stock market, in this entire Robinhood segment of the retail investors, that, these bankrupt companies, when they declare themselves bankrupt, they tend to shoot up in price. So people ran for this, and this was not even, you could say this was actually a deceased zombie, but somehow people still kept buying it, and it went up from, I don't know, it went up 1200% before it dropped again. So this was actually even the worst of the worst case, because this was a zombie that had been living off the scraps of the investors, and all of a sudden the zombie actually died, but then it got CPR or I don't know what, and people all of a sudden start to believing in the dead zombie would start walking again. So there are tons and tons of these companies, and I'm not saying that you should never buy a company that has a loss, and I've been giving you a loss for years, because there can be profit there if you're running with the trend. But what I'm doing when I'm looking at the company is that, first of all, I'm trying to see if there's some value in it, or at least some sort of momentum, some sort of quality in the earnings. And I can look at the stock ranks, I can look at my own Q scores, and what I'm looking for there is this a company I would be comfortable owning? Maybe that, would I be comfortable owning 100% of this if it was my own company and I would run it as a businessman? And if I can say yes, it is a decent company with a decent profit and growing properly and not being leveraged too much, well then I can say, now I would like to own the company. Then I can look at the charts to see, what about the others in the markets? Do they want to own the company? And if I can see that the other investors are running for this company, for these stocks, and it is a stock that I would like to own myself, then I jump in. It is very, very rare that I buy up in stocks where there is absolutely no fundamentals there, and where no one would want to buy them. For instance, there are some cases, I was analyzing some mining stocks lately, and you could say that these early developers mining stocks, they are actually kind of zombies, but not real, because what we are seeing with the zombie stocks is that there should be no real plan as to them getting into a profit at some point. And when we're looking at these early miners, these developers, then yes, they are burning money, but there is a clear path towards either being taken over by one of the larger companies or starting to produce themselves. It might take 5 or 7 years, but there is a clear plan. Most of the companies, they don't really have a plan, because the money they have is spent purely on paying interest and not on any developing. I hope this makes sense to you. Otherwise, please write in the comment section below. And if you want to support my channel here, you can subscribe to it, you can hit the bell notification and the like button. And if you are in some other Facebook groups or other stock groups out there, you can share my videos if you find it relevant. Thank you for your time. Take care of yourself and your money out there. Don't put too many of the money into zombie companies, and I'll talk to you again soon. Thanks for now.